Okay, this is a dollar index analysis using ICT concepts, the monthly and weekly timeframes, including the 3-week, 2-week, and 1-week time frame. We'll start out on the monthly. Okay, we'll see price went all the way up to almost 115 levels, then get rejected below this order block, but it did not. This candle kind of closed below. Anyway, it consolidated and reacted off a monthly fair value gap, taking out liquidity before expanding, created another fair value gap, Bisi, monthly Bisi, came into this monthly Sibi and then got rejected hard the next month, last month in November, and it closed below this Bisi. So, the question is now, are we moving higher or are we going lower, right? So price came all the way up to here, which was see from here, this level, it's a premium level. Okay, so now the range we're currently in is from this low to this high, and we've currently came all the way to this monthly order block here. So the question is, where are we going now, right? So when a discount, let's go down to the 3-week time frame. Okay, so on the 3-week, this is the monthly gap here. On the 3-week, there's also another balanced price range, basically a Bisi that got disrespected and it closed below on the 3-week, all the way down to this 3-week Bisi, and it did not close below. Okay, so what I'm possibly expecting is price to come into this monthly Bisi again and then get rejected lower, either at least to this midpoint of this monthly 3-week wick, or just breaking new lows, right? We don't know that, but I mean this is the 3-week time frame, and there's plenty of trades that can be planned on lower time frames. So either that, or it breaks up, finds support, and then continues higher into this 3-week Sibi up here, which has not been traded to. It doesn't have to be, but it's possible. It was quite a displacement, as we'll see on lower time frames, but anything's possible with high impact news, NFP or FOMC, CPI, PPI. I'd be wary around those times, especially if structure looks like it's going to take liquidity and push back up, right? Okay, so let's go to the 2-week time frame. Okay, on the 2-week time frame, there's also a gap up here, which coincides with this monthly Bisi balanced price range that we could use as resistance. So that's interesting. I didn't annotate it on the chart, but I don't want too many things, but it's in here basically. So we racked it off here, which is also a 2-week gap and a 3-week gap and a nice break up here. Okay, so in this range, I would note where we are. Of course, we're at discount, but we could continue lower. If you do see on the lower time frames, if you do go on the lower time frames, like the daily, it'd be relatively high probability to take a long because we're in discount this range, we're in discount of this entire range, and we would be in discount of this range. So we're discount on on many time frames, on many scales. Let me put the fib one more time. Yeah, so it would be nice if price came all the way back up here, maybe even touching this wick into a premium zone. That would add more confluence for us to take a short at those levels, try and catch a short. If the 2-week candle closes above it, and shows no sign of slowing down, then we could look at using that as support to move higher. But we'd have to wait for the 2-week candle. Let's go look on the weekly candle. Okay, so weekly, there's also a weekly gap. So you can treat it the same as all the other time frames. It's all fractal. Yeah, so price could come into here, into this weekly order block, and then get rejected lower. And you could use all these zones as an inversion zone where you could find shorts. Alternatively, yeah, price could spike up and use this as a breaker block in order to move higher. Okay, just to note that these two boxes here and here are a new month opening gaps. They're very small, but I mean you can see how price comes into it and reacts to it quite a few times. It has not come to this one yet. Again, it doesn't have to. Yeah, so I'd be looking at somewhere in this zone for a weekly candle to preferably close below in order to take a short. Alternatively, a structure on lower time frames, a daily, 4-hour, that's as low as I would go, to show some sort of structure that and PD arrays that would want to make it go higher. Then you could catch along from here to here. I mean, you can't catch along on the DXY unless you're trading the DXY futures, but you could catch a short on pairs like euro, dollar, anything with the symbol before the dollar. Okay, so yeah, I think price, it would be nice if price comes all the way. It doesn't have to, it can just come into here and react, but it would be nice if it comes into premium. Maybe this order block and shows some structure on the lower time frames that consolidated to liquidity during either kill zone or high impact news event, anything that looks like manipulation, which would help confirm our narrative as ICT traders. Okay, so you could take along from here, or possibly take shorts from there. But important, yeah, to wait for candles to close. Okay, that is all